To the capital market now. Over the course of the last 62 years, the Securities and Exchange Commission has created policies that have seen impressive results recorded with regards to enhancing primary market activities, demutualization, strengthening corporate governance, among others. One of the testaments of Nigeria's boom in the capital market has been the Nigerian Stock Exchange, which since its establishment in 1961 was demutualized to the Nigerian Exchange. As a roadmap towards the development of the capital market in Nigeria, several other frameworks have been recorded, including the amendments to the Investment and Securities Bill, the Capital Market Master Plan, harmonization of databases, and automation of several processes amidst unclaimed dividends over the years. While the Nigerian capital market remains a shining light, there remains more to be done. But the question is, where are we now? Well, Ambrose Omodion, the Chief Research Officer of Invest Data Consulting, joins us to shed more light on this question. Good to have you join us, Ambrose.
Thanks for having me again.
Glad to have you.
Yeah.
Okay, so
happy independence.
I should have started with that.
Yeah. Thank you, Nigeria, same to you too.
Well,
thank you for coming.
Yes, let's look at the capital market. 62 years now. What are your thoughts?
Yeah, as we just said, I would say to start with, we'll say kudos to NSE. We have made progress in the, for the past almost these 62 years as an exchange. Started from Lagos State, Lagos Exchange before now, before changing into the Nigerian Stock Exchange or NGS as we speak now. But on the way that if you look at the figures that started from the first day of that market to today, we have seen increased number of shares listed on the exchange. We have seen improved management. We have seen also transparency all the way. But I will say that we need more because exchange is free entry and free exit. That's why there are some companies that have delisted, there are some new ones that are still coming to the market. But the good thing is that after the last financial meltdown 2008, we have seen tremendous improvement on the exchange. I will tell you that because most companies that even suffer losses and then now they are the kings of the market today. They created value for what? For investors. That's why I said smart money. Go and check the big names on the exchange today. These are where the big boys in Nigeria today have shares. And that's that you as an investor go where the billionaires are also investing. And I tell you, for investor, for me, the market have created wealth for them. And that is the purpose of what stock market anywhere in the world, to create wealth for designing investors. All we need more education to attract more investors to the market. Before now, our dependence have been on foreign investors. And in a market that you use to drive your economy, you need to be inclusive market where you have your local players play the market more so that they cannot benefit from that market. But before now, as I've said earlier, when the market crashed, we have about almost 60% in the hands of the foreign investors. But the good thing today, I would say anywhere that the last 3 years we have seen that a shift to local investors to have the market, but on the help of what? Of the PFAs, the institutional investors in Nigeria, which is good. But we need to now go out and bring retail investors also, because we want the market to be more active, more participant, it becomes more interesting for what? For every player. Also encourage listing. We said free entry and free exit. That is the market. But now if you really want the market to be deep, because people will have trillions now, they look at the world of the fixed income market, because it's more robust and more because of debt market. But if you really want people to play equity, you need to also bring more product to the equity and educate them. We have seen most of Islamic product on the market, we are not giving them education. We are bringing derivative, you are not giving education. We are bringing ETF, you are not giving education. That is why those market is still not active, because people they don't understand the market. You need to bring a market first, go and educate these people before.
Okay, let's start from here. Talking about this education now, whose responsibility is it to educate the people?
It's all the parties involved, starting from the operators with the stockbroking firms, and NSE, which is also the regulator. But for me, the major education should come from the regulator, because they make budget for that, every year. In your budget, what are you training? Are you training the stockbrokers? Are you training I call the financial journalists, the reporters on this, for media house? These are not people that want to train for the capital market. Train those that are really going to play. All those men on the street, the Okada man, the Marwa. These are people that need to train. All those taxi drivers. That if they're earning money and they're saying, well, before now, apart from this new law that is coming for the bill, I see that most of them treat the work for posting scheme, because they see that is the only way they understand. But because we are not giving them the good side of capital market, the people see that is where it's very risky. But now education should go to everyone, understand that you can even plan your future with this market. You buy some stuff that at a discount, with time goes on, you make money. But if you are doing your policy scheme overnight, that thing can go down. You now go back to square one, because you don't understand the game. That's why I think that
quickly now. Okay, my colleague has a question for you.
Okay, go ahead. I'm sure you wanted to ask.
Okay, so you said something about the market before now. We had more of foreign players, but now we have more like an exit, and the local players have taken over the market. But what exactly is responsible for that? I understand from your explanation that it's a good thing for us, but then what happened? Why did that happen?
No, actually, foreign investors anyway, we have two types of foreign investors. We have direct foreign investors that come to Nigeria and stay 5 years and build factory for us. But those portfolio investors, their name alone to tell you that these people are not coming there to stay. Portfolio investor. That means any change in your policy, any change, they are carrying their portfolio and they are leaving you. And those that they are coming in and have attracted to the market will go into loss because they want to sell at any time and go out, and they might want to sell at loss. But those that have entered, follow them, will also be crying. They are telling you that, post COVID-19, our market touched about 11 years below 2020 because of the news of COVID-19. Around February that entered the market. Market touched around almost 20,000 basically before the ban. Why? This foreign investor, boom. Because you know that they have to leave. Yeah, you know that even in their own country they're having some heat. But staying here, you know that people are not, you know that health-wise you are not prepared. All those before that they really want to live first. But the that when they left, an opportunity for the PFAs to come to the market. Why did they come to the market? Most of the companies on the exchange also posted impressive number to date as we speak now. That's why they're in the market and they're happy.
Okay, let's look at the Yeguda Lamido Yeguda's led government team and what they've done so far since they came on board. But again, before that, I want us to look at the journey so far. How well are we doing? There's a saying that the capital market is a reflection of the economy. Now, the capital market has done, let's say, more than 20% or 25% before dropping low.
Around 15%.
Around 15%.
Yeah, I agree with you.
I mean, but if you look at that again, was that a reflection of the economy, of the general well-being of the economy? What is the difference? What's the disparity? How do you reconcile that disparity? Then, secondly, where are we now and the future? Okay,
when you say the stock market is an indicator, anywhere in the world it remains an indicator. Why? A point to what is happening or what's about to happen in the economy. If you remember in 2014, 2015, 2016, the market was down. Right. Already I think that the economy is down. That led us toward the first recession. It's a thing that the market are already giving you that something negative is underway. And then for that about immediately we start improvement in the economy, so market pick up 2017. That is that it's a leading indicator already. And also look at all the sectors that are listed on the exchange. They reflect what is happening in the economy. That's why I say if you look at your GDP, you see that we are seeing the agricultural sector, we are seeing petroleum sector. What is the performance in your GDP? Then if you go to the exchange, you look at the companies that also release their number, tell you that what is going to happen there. That's why I see as at now we have seen the third quarter ending September last Friday. As at this morning, I just saw the first data as well that for September, that our purchasing manager has also improved in the midst of increasing rates as at the last 2 days of the month of September. You see, because traders or foreign sectors have adjusted to the new 14% change in the rate, business for the month of September, August was down. That's in that private sector. But as of September, it started coming up. But now we are coming again to another increment of almost 15 basis points. Also in the next October, what's it called? Purchasing manager index is likely to come now. For you as an investor, this I think will also be guiding you to know where we are going. As I said, capital market anytime is a leading indicator, no matter what it is.
Before we wrap up with you, I mean, because of our time, if you look at the capital market at the moment, what would you say is the key attraction that can really attract? Because it's a pre-election year, an election is around the corner, and there's always a saying that once there's election fever that can put fear in the heart of investors. So what should they do with these numbers? How cautious should they be? And do you think the government is willing to boost that confidence with maybe new policies or statement?
No, I said it's one of the program that every election year you see that the government are already sitting at the back seats of the bus. They stay back to what was happening. But thank God for this full government. They've emphasized that they want to give us free and fair election and also improve security, which also it will help the business in this period to the handover. Good. But one thing that investors should look at, we are seeing the macroeconomic data that have been released to the economy. Right. We are seeing company performance. Like I told one of my colleagues when I called me that when I saw this data that I just explained, NPR, it tells you that the impact of the last adjustment will not show on the data that will come from the month of third quarter. That means we're likely to see another better Q3 numbers for the company listed on the exchange, which is a good thing. Now our eyes will now be the last quarter of the year that comes with seasonality. What's going to happen? This quarter comes with a lot of things. We'll be seeing Santa Claus rally. We'll be seeing consumption will increase. Companies that are trying to food will make money. That means this festivity period, another we'll call end of the quarter, end of the year, will come with the end of the year. That means there's a lot of things that will impact price in the last quarter of the year. That means this earnings we're expecting will be the foundation for people to react. Also, don't forget that the PFAs that said that took over from the foreign investor,
right,
they didn't play market in the second half of the year because of what they are trying to watch where the trend is going. But when they saw the inflation figure hitting 17 years high, they start jittering. Why? Because most of their returns are in real negative down. For that, they want to see where can we edge against our investment. I'm saying that once they see the third quarter result, I'm not speaking for them, but they might likely that because the time value of money will be shorter than if I'm going to invest in fixed income market for 1 year.
That could inform the
decision to come back. Because if I'm saying because Treasury will have moved to 12% for a year, that means in this September, October, I think Treasury position I have to stay till next October. That is 1 year. But if I'm looking at stock that has about 14% yield, I'm going to enter and the price move from the price to another price and give me another 10%, plus that 14%. I'm already above inflation.
Okay.
People, that's why I believe that will attract them. But investors should let them think long and the medium for now, because we expect that as election year is approaching. But the good thing is you have in mind that before I round up, this election year that people are talking, fine, it has a way of putting fear to people in the market. But it is when these foreign investors are selling that you see the blood flowing in the market. As far as these are Nigerians in the market, they understand that, we know what we can do, we know what article can deliver, we know what technical then. I think that let's see their manifesto and see where they are going. After they panic as at when foreign investors 80% in the market won't be there, because about just less than 15% in the hand of foreign investors. For me, we don't need to. I mean that yes, as investor, fear of election will be there, but it won't be as much as when foreign investors will be there.
Exactly. Thank you so much for sharing your thoughts with us.
Thanks for having me.
Thank you for coming. I'm Bruce Omodion, Chief Research Officer, University Consulting Limited. All right, so we'll take a moment. When we return, of course, it'll be time to look at the economy, fixing Nigeria's challenges or economic challenges, but this time we'll focus on leadership questions and, of course, the issue more issues ahead. Please stay with us.